The US dollar has fallen to its lowest value since 1973. What that means. July 4, 2025. President Donald Trump wants to boost EU.S exports and reduce imports. A sharp decline in the US dollar, more than 10% over the past 6 months, may help him do that, though at an unexpected cost. The dollar now sits at a 3-year low. Investors increasingly believe the US economy will no longer outperform global markets due to tariffs and worsening fiscal conditions. While US stocks are at record highs, foreign markets have seen even better returns, and EU.S debt is becoming less attractive. Many in Trump's administration expected tariffs would strengthen the dollar by curbing foreign imports. But instead, EU.S growth prospects have weakened, making US assets less appealing compared to countries like Germany and Japan. Theoretically, a weaker dollar helps make EU.S goods more affordable abroad, but early data is inconclusive. Many EU.S firms rushed to import goods ahead of tariffs earlier this year, skewing trade figures. New production investments announced by the Trump administration are still far from operational. A falling dollar also hits American travelers who now get less for their money abroad. More significantly, it can drive up inflation at home. EU.S consumers and businesses still rely heavily on imports, which become more expensive when the dollar drops. Another concern: foreign investment in EU.S financial markets is waning. Though the EU.S stocks have risen, they've lagged behind European and other global markets. Bob Elliott of Unlimited Funds warns the EU.S is not only reliant on foreign goods but also on foreign capital to support its markets if confidence in EU.S assets wanes, so it might the inflow of crucial investment. Bank of America analysts report a growing trend of investors shifting away from EU.S assets. They cite concerns over protectionism, unpredictable policies, a growing deficit, and proposed taxes targeting foreign investors. Many international investors are reallocating to their home markets, especially in Europe, seeking more stable policy environments. Still, some analysts argue our fears are overstated. They point to strong EU.S fundamentals, including pro-growth regulations and recent tax cuts, as reasons for optimism. June labor market data showed some resilience, and the dollar even saw a short-lived rally. But if growth slows further, the Federal Reserve may cut interest rates, making EU.S assets less appealing and weakening the dollar further. That, in turn, could increase import prices and inflation. It's a doom loop, said investor Danny Dyan. While inflation has been increasing. By NBC News, story by Rob Weil, July 4, 2025.